guys thought I forgot about the intro music, didn't you? Happy Friday, you magnificent melon heads. It is my favorite time of the week, my Friday afternoon live stream, when I get to talk to you magnificent, wonderful people all about what is going on in the economy and markets. And let me just say, once and for all, I am so sick of hearing about the Fed pivot. For the love of God, can we please stop hearing about the Fed pivot? It doesn't matter anymore, folks. And, I kind of have been alluding to this recently. I talked about how CPI doesn't matter a couple of videos ago, it was a few weeks ago. It's no longer about what will the Fed do. It's no longer about what is inflation, because inflation might steer what the Fed's going to do. The Fed has already done what the Fed's going to do. Now we have to live with it. And, a lot of the best minds on FinTwit and on FinTube, they're all talking about lagging indicators right now. And that's important because what the Fed has already done, they did it last year with the most rapid pace of quantitative tightening and the most rapid pace of interest rate hikes in history. We have not felt the effects of that yet. We're about to start feeling them soon. Maybe we're starting to feel them. I mean, if you guys watch my morning shows, my shorter form live streams, every day for how many days in a row now has there been another anecdote about another couple thousand layoffs? And this morning, man, there was a big one, two big ones this morning. They were small layoffs. It was only like 1,500 combined layoffs, but it was Hasbro and Goodyear Tire. Now, those are not banks, right? We got the layoffs in the banks back in December. We've been hearing a lot about the big tech layoffs, right? Those are two specific sectors where we've seen a lot of layoff talk recently. But now it's into tires and toys. These are not companies that expanded or hired too fast with the pandemic boom or anything like that. The toy makers and tires, folks, like everyday items that people need, and they're laying people off because they're expecting a slowdown. And then the economic data, the consumer spending slowing down. My God, that bombshell report from the Bureau of Labor Statistics 2 days ago. I did a video about it yesterday. There's a link down in the description. I'm going to ask you guys again, please help me get the word out about that story. Hey, it's great for the channel, and I'll take the growth, and I'll take the subscriber count, all right? I have my own selfish reasons for this. But beyond that, there is still nobody talking about it, about what happened on Wednesday of this week. The Bureau of Labor Statistics very quietly went out and said, remember that 1,121,500 jobs we told you the economy created in the second quarter of 2022? Remember, Brandon took his victory laps and talked about the economy. And then for the rest of the year, they kept turning the screws to us, tightening and cranking rates and raising rates, all telling us the strong jobs market, the strong labor market. We're not in a recession. We can keep raising rates, the strong jobs market. It was all fake. The economy actually lost 287,000 jobs during that same period. And there has not been one word written by the mainstream press about that story. This report was just released 2 days ago by the Bureau of Labor Statistics. They have been lying to us about the jobs market. They have been lying through their teeth about it. They just admitted it in their own words. This isn't like an independent analysis done by some DC think tank. This was the Bureau of Labor Statistics revising their own numbers downward by 1.4 million jobs for one quarter. And that may be happening for the third quarter and the fourth quarter too. For all we know, unemployment could already be way above 5%. I mean, the official statistic right now is unemployment is 3.5%. And the numbers I put out in that video yesterday, 1.4 million jobs, that is worth 0.9% unemployment. So if you add that to the 3.5 we have right now, that's 4.4. And guess what? The Fed's metric for a soft landing has been 4.5% unemployment. We're already right there, just if you factor in where we were at in the second quarter of last year. They have been blowing smoke up our proverbial derrieres for the better part of a year now. We have been in a recession, arguably for a year. It's getting worse. They lied about jobs. They lie about inflation. We all know they lie about inflation. They're lying about GDP. That 2.9% number yesterday was fake. Ask any business owner right now. This is not economic expansion. I mean, God, we have 1 million people living in tents around this country right now. This is not a period of great prosperity for Americans, folks. All right, Jack, you're really soapboxing it today, so maybe it's time we tone it down a notch. Let's bring in my man, Mish, who is ever a ray of sunshine and a source of optimism for the channel. Mish, how we doing today, brother?
I'm doing good. I think we're going to keep with the ship theme today. I don't know if we had a ship theme, but so imagine that we're a big ship that's going ahead flank, and then they threw it into emergency reverse for 6 months, and now they're at like emergency back 1/3.
Hmm. I have to say it. When you said we're on a ship, how many a-holes are on this ship? I'm surrounded by a-holes. I love that movie. Tell me what movie that is, folks. I love a good movie reference. Drop it down in the comments. Tell me the movie. 1 million arbitrarily created melon tokens to the man who first gets that movie reference right. Or woman, I should add.
Yeah, we just went plaid.
We just went to plaid. All right, Mish got it already. I should have known. By the way, thanks a lot, Dan Hedin, for the super chat and the support of the channel. I appreciate that, brother. He says there is a shortage of tires as well. I read about a rubber shortage a lot last year, that there was a big die-off in rubber trees overseas in South Asia. I can't remember exactly what region it was. It was in Southeast Asia. There was a big die-off of rubber trees. I do remember that story. It kind of fell by the wayside. It didn't get that much attention. But yeah, the price of tires, I know that's high. The price of everything has gone up.
Well, I tell you what, I think you remember me kind of complaining about it for 2 months at the end of last year. I couldn't find tires. And that was because all of the more inexpensive tires just weren't available. If they weren't expensive, you weren't getting them.
Yeah, I feel partially responsible for that story, Mish, because I remember it was when you came out to visit me last summer, and I was like, hey man, your tire's low. If I had just kept my big trap shut, you wouldn't have had to buy new tires. It's all my fault. I blame myself. Sorry about that.
Oh yeah, man.
Thanks again, Dan Hedin. I appreciate the support, the channel, brother, and the super chat. All right, guys, what you're looking at on the screen right now, this is the Bureau of Labor Statistics report. I talked about it this morning on my live stream. I talked about it yesterday in the video, so I'm not going to spend too much time on it, but you just can't, I can't fathom the extent of the BS. Negative 287,000 when they told us it was 1.1 million positive. And then everything they have done to us, all the hiking and the tightening and everything, and what it's about to do to us, it was all based on it's so wrong. I can't say it was an error. It was an outright lie. I mean, it was an outright lie. And again, these are the government's own numbers. This is not some speculation. This is not me and my distaste for government authorities, which, hey, I'll wear that on my sleeve right next to Perma Bear. It says, I hate the government. All right, I'll own that. I get it. But this is their data. All right, so it's not confirmation bias here. We don't do that here, as I'll show you later on in the show. All right, guys, let's take a walk through the indexes and see what's going on right now. It seems like I put a hex on this market melt up because right as I hit the live button, this red candle formed up here. Are we going to sell off in the close? I don't know. Let's see. Right now, the S&P is up 26 points on the day, 0.66% at 4,087. Great week for the S&P. Dow also having a good week right now. Still up 147 points, almost 148, or 0.44%. Over the 34,000 mark. That's a significant move for the Dow there. And the NASDAQ is at 11,672, up another 161 points today, or 1.4%. Risk on. Why not? Why not? Pile on the risk. What's the worst thing
we've been generally up. We've been generally up all year.
That we have. Since the start of the year. By the way, guys, I just want to warn you real quick. I have come to, I don't want to say trust, but I have come to pay heed to this indicator, even though I have a general loathe for the source. The Fear and Greed Index that CNN puts out has been pretty good, and it is right now at 70. All right, and I talked about this one this morning too. Check out the history of the Fear and Greed Index. It calls tops. And here we are right now. Okay, tick down to 69. That's good. Good. La-di-da. But but it's as high as it's been all year. November 30th was the last time it was at this level, which was right around the end of that bear market rally. So, keep an eye on this one. This thing is telling us the market is poised to flip. And, hey, maybe these red candles right as soon as I started my live stream, maybe somebody is finally listening to Perma Bear Jack and the market is going to go down. Maybe that's why. It's all my fault. I apologize to anybody who lost money on that. It's all my fault. Bojo from the 420 Cafe. Thank you, sir, for the super chat. He says, Spaceballs, one of my favorite scenes. 1 million melon tokens to Mr. Bojo. Brojo, I'm sorry, not Bojo. Mr. Brojo. Thanks for what you do between this. Pfizer? Oh, we can't talk about Pfizer on this show. My God, would I like to talk about that one. Did you hear about did you see what happened to George Gammon this week? George Gammon was doing a live stream talking all about that Pfizer situation, which I will not cover because the shadow ban thing, it is very real, folks. It is very real. And, man, I'm like 4,000 behind Chris Taylor now, 5,000 behind Chris Taylor, a financial prepper. Chris, I'm coming for you. This shadow ban won't last forever, brother. I am coming for you. But George Gammon, right in the middle of his live stream, whoosh, they just cut the feed. He was talking about that story, the Pfizer story, which everybody should go. You got to go to Twitter to get any information now. And I tell you, thank God Elon bought Twitter. The things we would not know right now about the most powerful people in the world if Elon Musk had never bought Twitter. All right? I'm not saying I trust Elon. I think Elon is out for Elon. All right? He's not out for us. He's not out for Mish, for you, for me. Elon is out for Elon, and that's fine. People can act in their own self-interest. Yay, capitalism. But he has shined a light on some really dark places in society. So he has done us all a service with that, whether it was for his own interests or not. We have all been the benefits of that. So go check out that Pfizer story when this stream is over. He's also talking about Biden and Ukraine. Two more things I just don't want to touch with the 10-foot pole. Although if you meet me in public and, you put a beer in my hand, you'll probably get me spun up on both those topics. But we're not going to do it on this show. And he says, what do you believe anymore? Prepare friends. I believe in my immediate surroundings. I believe in the people I choose to associate with. They are good people. They're decent people. And they're not out to hurt anybody. And so that's what I'm preparing for, to take care of me and them. And you fine people. I believe in you guys. You guys are awesome. I got a great crowd here. The Melonheads, you guys are the best kind of people. It has been the most pleasant experience since I started the YouTube channel. I really thought it was just going to be me sitting in my chair, shouting into the ether at a camera. I never could have imagined how much would come back. And really, I've met some really cool, salt-of-the-earth kind of people since I started doing this. And, well, I just love it. Thank you, Brojo, very much for the thoughtful comment and for the kind words. And speaking of awesome people I have met on the road since I started doing a YouTube channel, what's going on, Jose Orozco? Thank you, sir. He says the government would never lie to us. Of course not. No, not the government. I mean, no. Say it ain't so, Jose. Say it ain't so. I mean, sure, they'd lie to us about inflation. Okay. They'll lie to us about GDP. They'll lie to us about jobs. They'll take us to war under false pretenses. But no. They wouldn't lie to us. No. Come on. Oh, folks, it's the 2020s. Let's not rule anything out. Thank you very much, Jose Orozco, for the Bucky's Corn Nuggets once again, and for the super chat and the support of the channel. You are a gentleman and a scholar, sir. All right, let's move on.
Go back to S&P real quick.
Let's go back to the S&P. All right. I lost my place here. What are we seeing on the S&P?
What did Mike say he was going to get to?
4,600. Mike called a 10% bump last week when we were pretty much right around the 4,000 mark. So we got a long way to go to Mike's target price. But we are closer to Mike's target price than we were last week. Actually, I think 4,400 was his target then. Yeah, it might have been 44. I got to go back and watch last week's live stream. But, hey, man, if I don't think we get to it, but if we do, I will eat some crow for everyone to see. Maybe I'll eat something else because crow is actually really good to have around your chickens because they scare away hawks. So I don't want to eat crow, but I'll eat some crow equivalent for the sake of my chickens. All right, let's take a look at what's going on in the bond market right now. we have got yields are up across the board pretty much evenly. It looks like the mid to the longer end of the curve is up a little bit. We got the 10 years up just about 3 basis points or 0.83%. Not a lot happening in bonds today. Let's take a look at the long-term trend on the 10-year yield because I've shown this one a couple of times. You know, we had the start of last year. We were right up, sitting on the 200-day moving average, and we had this uptrend that lasted all year long last year. Now, here we are, the start of this year, and we've got a new downtrend. But if you look, this new downtrend line that I drew, it ran face first into the 200-day moving average, and it caught a bounce there, and it's been moving higher. So we're going to keep a look at that one. First attempt at the 200-day moving average has been thoroughly rejected. I'm going to keep an eye on that. Do we go higher from here? I mean, the Fed is still hiking, so the short end of the curve is still heading higher. But at the same time, we've got a lot of cash that is hiding in the long end of the curve, bidding up those prices, sending those yields lower. So we'll see what plays out. That's a trend I want to keep an eye on because, you know, so goes the 10-year, so goes the housing market, so goes mortgage rates, auto loans, you name it. So where is the money coming from that is flowing into 10-year bonds right now, the long end of the curve? That I'm curious to know. Where is that money coming from? Because right now the Federal Reserve, the Bank of Japan, the People's Bank of China, all the biggest owners of treasuries in the world are selling. And yet yields are moving lower for these last few weeks. So where is that money coming from? Inquiring minds want to know. Let's take a look at commodities right now. We have got gold is down just over $1 right now, 0.06%, pretty much flat for the week. We're at 1928 on gold. Silver having a rough day, although looking a little better than it did this morning. Sadly, below the 24 mark at 23.69, down 32 cents or 1.35%. Crude oil was up $1 and change this morning, now down $1 and change at 79.47, down $1.54 or 1.9%. And natty gas finally catching a bid. How do you like that? I love an underdog story. Look at natural gas with that 2-cent gain today. Congratulations to all the natural gas bulls after the just bludgeoning you guys have taken over the last few weeks. Look at this natural gas chart. UGLY. That is an ugly, ugly gas chart. All right, look at this RSI sitting down here. Currently at, we're up to 27.7 on the RSI for natural gas futures. We've been under 30, other than a couple of minutes on this one day. We've been under 30 all year. This is going on 3 weeks now. The RSI for natural gas has been under 30, and this thing just keeps making lows and lows and lows. Just down it goes. This thing will eventually catch a bid, folks. I don't know when, but when it does, it's going to be big. And you know, I've drawn this before. Look at the last few times that the RSI has been anywhere down in this neighborhood. We had it right here. We had it down here. And look what the price did each time the RSI was that low on natural gas. Now look where we are right here, way down here. So where's natural gas going? My guess is eventually it's going that way. Does it stay there? I don't know. How long does it move up? But nothing stays this oversold forever. Sooner or later, this thing's going to catch a bid. The slightest bit of good news for natural gas, and this thing's going to rocket. And the Freeport natural gas plant, that LNG plant in Texas, starting back up. It's going to start consuming 2.5 billion cubic feet of natural gas per day very soon. Maybe that will be what finally breaks this trend. All right, let's see what else we got going on here. We were on commodities. The U.S. dollar is pretty much flat. It's up 9 basis points right now, 0.8%, below 102 at 101.92. So the dollar, you know, let's look at this for the week. The dollar traded pretty much flat all week. It bounced around, a little bit of volatility, but not a lot of move any one direction. Looking at the last month, it is kind of putting in a bottom here. Now, I've been speculating for a while that the dollar was going to catch a bid at 100, and that's where it was going to bounce, if it was going to bounce. So far, the low we've made is about 101.5. So we'll see if we're still in this trend, or is this thing trying to make a turn back upward? And speaking of, you know, trends from last year that suddenly reversed, look, the U.S. dollar just straight up all last year. And then right around September, man, that thing just turned on a dime. I think it was the Bank of Japan that really set that in motion when they started selling dollars to defend their currency because of their ludicrous yield curve control policy. and all the yen they were printing over there. And then the PBOC, the People's Bank of China, joined in, and they started selling their dollars to prop up the yuan because they're also trying to prop up their housing market over in China. Remember the Evergrande story? Whatever happened to that one? That's still out there. I mean, Evergrande is still a thing. They still owe that money, but I think all that debt is probably sitting on the balance sheet of the People's Bank of China right now. And that's why you're not hearing about that story. The Chinese bailed out their housing market after spending the better
We
part of
didn't
the
hear
last
one
decade.
Western bank go down from that.
No, we did not. And I had theorized, I spent a lot of time talking about that. I thought it was going to take down some European bank because they had a lot of exposure. But if the PBOC came in and bought up all that debt, then maybe what the PBOC really bailed out was the European banks. Possible, right? Although then the European governments also had to bail out the European banks, and the Fed with their dollar swaps, they also had to bail out the European banks. Everybody's bailing out the European banks. Maybe the European banks can bail out themselves, or, I don't know, learn how to fly. Hey, I just throw them out there, folks. You do what you want with them. Cheeseburger, what's going on, Matt? Good to see you, brother. He says, all the world's a stage, and all of this generation's actors are Kevin Costner. I don't even think they're Kevin Costners. I think we're a generation of Nicolas Cages. We will take any role you offer us. Anything. One of the funniest memes I ever saw in my life, it was a drawing of Nicolas Cage at a restaurant. A waiter was holding a basket of bread, and Nicolas Cage is like declining. And the subtitle was Nicolas Cage finally declines a role. That was one of my favorite movie memes I've ever seen. Yeah, all the world is a stage. We're a whole bunch of Kevin Costners. We're like cheap Kevin Costner knockoffs. Although Yellowstone is good. I like Yellowstone. I'm at least one season, maybe 2 seasons behind Yellowstone. So don't ruin it for me. But that's a good show. That's peak Kevin Costner. All right. Thank you very much, Cheeseburger, sir, for the support of the channel. Oh, here you are. You're back. He says, is it too late to get in on weapons contractors? Well, God forgive me if I make money. Depends what you do with it. Let me just put it that way. I don't get involved in that. Probably, I would have done well had I. This tank situation that's going on right now, sending the tanks to Ukraine and getting the Polish to, convincing the Germans to allow the Polish to send their Leopard tanks, hidden behind all that jockeying for position and all that speeches and all the negotiations was really arms deals for who is going to get the contracts to replace those Polish tanks when everything is said and done. Because the Polish used to buy the Leopard tanks from Germany, and then last year they started buying Abrams from America. And so if they had sent their Leopards over to Ukraine, then they'd be replacing their German tanks, and maybe the Germans didn't want the Polish to be buying more Abrams tanks. And of course, U.S. foreign policy is just dictated by what gets us more weapon sales. So help yourself to some F-16s while you're at it. Why not? Just keep poking that bear. There's still time to stop. Let me just leave it at that, folks. There is still time to stop this. I think our leaders they're not acting like there is, but there's still time to stop this before it blows up in all our faces. Even though the shooting and the killing has already started, it doesn't have to spread. Again, I just throw them out there. You do what you want with them. So that's my thoughts on defense contractors. Although they posted mixed earnings this week. I think the market was expecting better results from a lot of the defense contractors. They still posted big earnings increases, but below the expectations for the market. So they had a mixed week, the defense contractors. But I don't follow them that closely, to be honest with you. And above my pay grade in the house, what's going on, Amp Grade? Good to see you, brother. He says, do you put federal pensions in a different risk category than state or business pensions? Keep killing it, fellas. Thank you very much, Amp Grade. Appreciate the super chat, support of the channel. And that's a pretty thoughtful question, actually. Generally, pensions I put very high up Exeter's pyramid. All right, pensions are unfunded liabilities. They're supposed to be fully funded, but they're not. Some of them were fully funded very briefly in 2021, and then they started committing billions of dollars to fight climate change, and now they're underwater again. And now interest rates are rising, and they're getting clobbered on their rate swaps. That's still a thing. that issue that nearly sank the UK pensions. Remember when the gilt was rising last fall and they had to bail out the UK pensions? Our pensions are still vulnerable to that same failure mode unless they took the time, these lower rates, and they've divested of those rate swaps. But I don't know if they've learned their lessons. And, I'm still seeing articles about European pensions that are going to ramp up their pressure for ESG mandates. And they're going to, demand more commitment to fight climate change. Like, these are pension funds that a few months ago were clinging to life. They needed to be bailed out by the government, and they learned nothing. And they're playing games. They are playing political extortion using our money, we being the public. They're using our money to extort their political beliefs or to force their political beliefs on the world. It should be illegal. All right. If I was managing a whole bunch of people's money and I was using their money to promote my political interest, that's mismanagement. I would have a fiduciary duty to make the best possible investment on their behalf, not the best possible investment on behalf of my political affiliations. It should be illegal. And yet they're all doing it. So I think ESG will be a four-letter word eventually. But for now, they're doubling down on stupid. Now, about your question, I would definitely put business pensions below federal, definitely, and I'd probably put state pensions a little bit lower than federal, right? Because the federal government can print all the money they want to bail out their pensions. It's still a default because if they print all the money in the world to bail out their pensions, the money they'll bail out the pensions with, people will be made whole nominally. But the inflation will erode away that money that they finally get. There will be no spending power left in that money. So they'll pat themselves on the back and say, "Hey, I kept my promise." Go ahead, Mish.
I was going to say a lot of the difference is the federal pensions don't have a trust fund. They're just paid each year out of the budget.
Yeah.
State and businesses do have a trust fund, and they're involved and invested in the system, be it bonds, stocks, whatever, right? Federal pensions are not. They're just paid out. Yeah, there is no military trust fund pension. There is a railroad one, but that's a managed fund also.
Okay. And the states, the government will bail out the state pensions again if they start going underwater, if they're at risk of failure. Let's be honest with you. The government, they'll make some speeches. They'll talk about we owe it to these people. They own it. And there's truth to that, right? If you have a pension, you are owed. It's a promise that was made to you. But I would just caution you guys, prepare yourselves for your pension possibly not being there. It's entirely possible that pensions start failing. It almost happened in Europe recently. And if they bail out the pensions to save them, the money they're going to give you, they're going to give you every dollar they promised you, but they won't be worth anything by the time they give them to you. So you need to not bank on that in your retirement. If you're sitting there banking on a pension, and I get it, you earned it, you deserve it, I'm right there with you. But if it's gone, then it's not a matter of whether you earned it or deserved it or not. It's gone. It just is. So prepare yourself for that. That was a really good question above my pay grade. Thank you for that. But I would rank federal at the top because they've got the money printer. Just below that, I'd put the states because the federal won't let the states fail. And to Mish's points, the states are better funded. They're not just pointless IOUs. Below those, I would put business pensions. That's where I'd rank them if I had to split them up on Exeter's pyramid. Any pension, no, I would put all the way at the top of pensions pyramid, right below Sam Bankman-Fried and his good graces. All right, guys. Man, we got good comments today. Good chats. Hey, Dan Hadeen is back. He says next major weapons supplier is South Korea. Interesting. Supplier, really? I hadn't heard about that. What is South Korea supplying, Dan? That's interesting because they've always been big buyers of what we're selling. That's news to me. Again, I don't follow the defense contractor space all that closely or the defense industry. I mean,
Dan says they're going to build some tanks and some of the self-propelled guns.
Okay. Tanks and self-propelled guns. Well, there's a lot of people. I mean, I do follow the armchair generals, and I dabble in that myself. There's a lot of people saying that the main battle tank is obsolete. They've been saying that for a long time. And certainly the main battle tanks that rolled into Ukraine were obsolete because light infantry with American supplied anti-tank guided munitions have been dropping them left and right. So, hey, maybe the age of the tank is finally over. We'll see. Or maybe the tank is going to make a resurgence. Cheeseburger's back in the house. Does Cheyenne Mountain or Mount Weather offer an Airbnb service? Interesting. Maybe there's a way we could fill the budget gap. Start renting out Cheyenne Mountain. Start Airbnb and that stuff. That'd be cool. I'd pay to stay at. I'd pay to stay at Mount Weather or NORAD for a night. That would be pretty cool. Just let me see the button. Yeah. Yeah. There we go. Now we're thinking outside the box, Matt. That's awesome.
Well, I know you can go stay at silos for Airbnbs.
Yep. You can buy silos. Yeah, they're for sale. They're huge square footage. It's some of the cheapest square footage you can buy. Of course, they're decrepit, rusty, dangerous places.
Yeah, but then you have to refurb them and rebuild them.
Yep. All right. Thanks, Cheeseburger. I appreciate the super chat, sir, and the support of the channel. All right. Let's get back onto some of this Fed fear and not Fed fear. It's Fed optimism. All right. I mean, look, guys, and let me just start with the disclaimer. It's here on my sleeve. Perma Bear. I tell you every week. All right. I don't really do optimism. When it comes to markets, the world's finances are such a mess. It's just really hard for me to be optimistic about markets. Okay. So I'm going to throw my personal biases out there. So take all that I tell you with a grain of salt. Now, that being said, what we're looking at here with the S&P 500 is a breakout. Right? Look at that. Up we go. Right? I drew this chart. Now, I saw a couple of guys had drawn this chart differently than me. A couple of guys who I follow. See, we had this one green candle right here. I had drawn my chart a little bit lower than theirs. They would have put them right about there. But even if we take the higher chart that some of the other guys were drawing, we've got a breakout of that right here. We broke out. See that there? So the S&P is saying we're ready to head higher. Not so fast. Look at the RSI. The RSI is also pretty high. We're up in the high 60s right now. Not the most overbought it's ever been, but that's pretty high. And again, I'm going to refer you to the Fear Greed Index. The Fear Greed Index is ripe for a turnaround right now, for a reversal. And are we getting it? Well, there we go. There's the S&P 500. Big red candle heading into close. We got 15 minutes, 12, 13 minutes of trading left today. And right now we're giving up a lot of our gains. So maybe we're going to watch this sell-off in real time. That'd be kind of fun, not going to lie. But right now, the market has said, I have broken out of Jack's downtrend. We're due for a back test. We'll see what happens with that back test. All right. And the NASDAQ doing the same thing. All right. The NASDAQ, we had this pattern that I've been drawing right here. We've got a clear breakout in that trend. But look at the RSI in the NASDAQ. It's at 69.73 right now, almost 70. All right. Now, it has been higher, but back in August, that's where it peaked. Right here, that was the top from that summer bear market rally. Now we went higher than that, but that was before the bear market even started. Back in November of 21 is the last time before that we were higher on the RSI. So the Nasdaq is ripe for a reversal. Let's look at the daily on the Nasdaq. Well, big red candle down in the Nasdaq, right on cue. We'll see if that continues through to close. 11 minutes left in the trading day. All right, but there's just so much optimism in the market, the soft landing everybody keeps talking about. Look at this article in Bloomberg. Fed sees soft landing as silver lining of the temp jobs decline. This article was about how temp workers, which hit their peak in, was it September of 2021 or September of 2022? It was a few months ago. Temp jobs hit their peak, but now they're declining rapidly. And they're saying, oh, well, this just proves that we've nailed the soft landing. No, we have not nailed the soft landing. We are nowhere near a soft landing. All right. I've used this analogy before. We just jumped from a 20-story building and we have fallen 19 floors and we're sitting there saying, so far, so good. Not going to end in a soft landing. All right. And again, I refer you back to this report that if you take these numbers, it's worth about 0.9% higher unemployment. We're already at the soft landing target in unemployment if you take what the Fed just did with their second quarter of 2022 jobs numbers. Again, you got to go back and check out that video I did last night. You got to see that one. I don't often insist on this, all right? I want everybody to watch all of my videos. I want millions and millions of views. I want to rule the world. I get it. All right, but this one you got to go back and see. It's too important to let that story go away, and the press is still not covering it. It's a 2-day-old story now. They're still not covering it. I don't know if they will. Charles Payne, you out there? Everybody at CV Payne on Twitter. Of all the people in the mainstream press, I generally dislike almost all of them. Charles Payne is like the one bright spot in that sea of suck that is traditional finance press. I really like Charles Payne. So tweet that video at CV Payne. Maybe we'll get him to cover it. If anybody in financial press will talk about that jobs report, it'll be Charles Payne. But check out the chart in this one here. They're talking at this one. Weakness in temp help tends to lead overall employment. And they're talking about this like it's a good thing, like this is optimistic. All right, what we're seeing here in black, this is total payrolls in the United States. All right, we had that big drop in 2020 we're all familiar with, all right? And total payrolls continue to rise, right, because of our bogus Bureau of Labor statistics every month, another 200,000, 300,000 jobs. They're all fake. A year later, they circle back and they edit the data and say, whoops, we actually lost hundreds of thousands of jobs. But this red line here, this is temp workers. And if you'll notice, every time we've had a big drop in payrolls, the recession of 2000, the dot-com bubble bursting, the GFC, even here, it started really right after Repo Madness is when the temp jobs slowdown started. And then there should be a red bar here because we are in a recession right now. Try to define your way out of it or lie about your statistics. I think this recession is a year old. But look, temp jobs falling fast. Look at that red line there. And I can't zoom in anymore on this because this was a Twitter. This is a, can I zoom in? No, I can't. Sorry, guys. That's as big as I can make it. But you see temp jobs already falling fast, even as payrolls start to rise. Well, over here, it preceded a recession by a couple of months. Temp jobs started to fall. The rest of the payroll started to fall a few months after that. Same thing in 2000 with the dot-com bubble. Temp jobs started to fall first, and then payroll started to fall after that. Thing is, though, they kept falling for years in most of these cases. 2020 was the exception because they flooded the market with liquidity and they lowered interest rates to zero. And, of course, there was a big hiring boom. But this is telling me the fact that the temp jobs have started to fall fast. This is telling me that there is a very rapid reversal in this trend of payrolls that is coming very soon. And again, every morning I do my live streams, 9:30 a.m. Eastern time at the open every morning. Another story about another company with layoffs. Today it was Toys and Tires laying people off. Before that it was Temp. Before that it was
my
banks.
boy Phillips, right? He says the unemployment rate should be about 4.2 for neutral.
That's what Phillips says is the natural unemployment rate.
Mm-hmm.
Okay. Well, we're over that. I mean, we're at 4.4 right now if you add the 0.9 from the lying second quarter jobs numbers to the 3.5 that they're telling us right now. Then we're already above Phillips's natural state of unemployment. By the way, we got Challenged Investor. Thank you, sir, for the super chat. He says Lou Dobbs was okay. I didn't mind Moneyline back in the day. Lou Dobbs was all right. He wasn't terrible. Great for MSM, but that's a low bar. Yeah, that is a pretty low bar. I'll tell you who else I like. I like Guy Adami. Guy Adami is on what is that? Fast Money, the CNBC show with all the traders, which I cut the cord. I don't watch cable anymore. I don't have cable anymore. But back when I did watch CNBC, I liked Guy Adami. I follow him on Twitter. He still posts some pretty good stuff. He seems like the most reasonable of everybody. Again, the mainstream press and finance, it's just a big sea of suck, if you ask me. But yeah, Lou Dobbs wasn't bad either. Charles Payne, though, he is the bright spot. I like Sir Charles. He's a good one to watch. Although he had Meet Kevin on after the BlockFi blow up. After everything, um, I don't agree with that. I think you should have the people who refused the money from BlockFi, the people who turned down offers from sponsorships from FTX because they didn't smell right, because what they were selling was too good to be true. Those are the people who should be on TV. Those are the people who should be ringing the opening bell on the New York Stock Exchange, not the people who collected millions in affiliate fees and then came back and said, "We're sorry. I feel just terrible about that. By the way, buy my ETF. Here's a picture of me shaking hands with Jim Cramer and standing in front of my private jet that I just bought." So that was Charles. That was your one mistake. If you're watching, you shouldn't have gone there. All right, I'm not trying to start a YouTube feud here. Why don't we get out of that? Let's get away from that one real fast. But yeah, I agree. I like Lou Dobbs. He was pretty good. We got 4 minutes left in the trading day. What has happened with that sell-off? Oh my goodness, look at that. I did, Mish. I triggered a sell-off. Did I finally move markets? Did the Melonhead move markets?
Did.
I flatter myself.
You should check out oil.
Markets. Check out oil. Okay. I am remiss. I do not have the oil chart up. Standby trading view. Oh man, I am so slow on trading view still. I'm learning it, folks. I'm getting better at it, but here we go. Crude oil futures on the NYMEX. Maybe that's the right data point. Let's see. What do we got for oil? Let's set this to 1 day. Ooh. What happened at 3:21? That's a few minutes after my live stream. Look at that. Yikes. Not so good. Let me go back to my my daily candles here. How do I set this to dailies? I'm so bad in trading view. Thank you, Brian. Shout out to Brian Zarb from the technicalchartist.com, by the way. Brian has been teaching me trading view. Yeah, ooh, wow. We're falling right back below the neckline of that inverse head and shoulders that I had drawn. We're back negative for the year again. And we're coming up on, what is that, the 50-day moving average. Oil is selling off hard right now. What are we at? Where's the commodity chart here? Oil is currently at WTI 79.42. What's the NASDAQ doing? NASDAQ's still in positive territory, still up 114 for the day. So, I mean, this isn't a massive sell-off, but definitely profit-taking in the last few minutes here. Dow's taking the brunt of it. Dow's now up only 15 points. NASDAQ up 8. Why would the NASDAQ be outperforming? I don't agree with this risk-on sentiment, folks. I really don't. It doesn't matter if the Fed pivots. Proof is in the pudding. It's in the economic indicators. Check out that video I did about oil a few weeks ago. It was a few days ago, not a few weeks ago. The whole second half of that video was just a bloodbath of manufacturing data. Manufacturing numbers in the U.S., all these PMI reports, they are just awful numbers, just terrible. I mean, steep declines in U.S. manufacturing activity. We're going to leave the S&P chart up in the close here. We're in the last 2 minutes of trading. Thanks again, Challenged Investor. I appreciate that, sir. MSM, less than big banks, less than Treasury Fed, less than Big Melon. Peace. I don't even want to be in the same category as all those guys. No, I am well below any of those names. I am but a lowly tuber, a lowly fin tuber. But thanks a lot, Challenged Investor. I appreciate the super chat, sir. Guys, thank you for the super chats and the support of the channel. You guys are awesome today. Really appreciate that. Are we going to stay positive? Stocks just clinging to positivity. I don't want to switch off the chart. We got a minute left of trading right now. S&P still got 8 points positive. Dow still got 13, almost 14. NASDAQ is going to close green for the day. So we got that going for us, which is nice. But the S&P, is the S&P going to close? 1 minute left, folks. 1 minute. Will it close positive or negative for the day? Still, that's not going to be a good look. It's not going to be a good-looking wick on that candle to close the week out with. We're still 359, still running. Now it's catching a bit at the end of the day. Currently up 9.7. Dow still up 14. NASDAQ still up over 100, 106. Yep, we're going to close positive. Got only a couple of seconds left in the trading day. So, all right, pretty good week for stocks. Markets are closed, just barely positive for the day. All right. Everybody's very optimistic about the Fed. Now, let me just tell you this about the Fed. Markets don't bottom while the Fed is still tightening. Not now, not before, not ever. All right. And the Fed is still tightening. The Fed is still raising rates. And something we have not been hearing much about or at all for months now is the Fed's balance sheet. You guys remember the balance sheet? Remember that $8.5 trillion worth of stuff the Fed had to buy to prop the price of it up so that we could continue bidding up home prices into this massive housing bubble that now nobody can afford a house? And then to fight that bubble, they raised interest rates. So now the mortgage payments went up and now even more people can't afford a house. Amazing how that works. But, it's all right because they sold all their stocks at the top to avoid the appearance of a conflict of interest. Well, the Fed balance sheet, still $8.4 trillion, folks. There's still a lot of money sitting on that Fed balance sheet, and they're not going to stop quantitative tightening. Joe Brown just did a video, I think it was last night or 2 days ago, saying that we could actually, in the foreseeable future, encounter a situation where the Fed is lowering interest rates while they're still quantitative tightening, while they're still burning money. So basically stepping on the gas and the brakes at the same time, which I don't know much about cars, but it's great for the engine, right? What do you think, Manarino? Greg Manarino's a big car guy. It's good when you step on both pedals at the same time, right? I mean, 2 feet, 2 pedals. It seems like science to me.
I prefer 3 feet, 3 pedals.
You're a manual guy, huh? You're so clutch, Mish. You're so clutch. So yeah, even if the Fed pivots tomorrow, which they won't, they're going to hike by 25 basis points, and they're probably going to do it at least one more time after that, probably 2. They're going to continue quantitative tightening even after they're done with that. And remember, markets don't bottom while the Fed is still tightening. So, everybody's saying, hey, Fed, 25 basis points, the pivot is now, great. Dovish Jerome Powell, buy stocks. No, that is not the right answer here. I mean, hey, your money, folks. You do what you want with it. I just throw them out there. Not a financial advisor. All that CYMA stuff. I am not a buyer of stocks here. Not while the Fed is still taking away the punch bowl. Economic conditions do not improve while the Fed is tightening. Got my man Cheeseburger says, a lot of commercial real estate coming up for lease over here. A lot of signs out front of buildings. Layoffs are starting, cracks forming in housing. Yeah, I'm seeing the same thing, Cheeseburger. I saw this morning there was an article that Amazon is selling this massive office park outside of San Francisco that they bought in 2021. They had planned to convert it into warehouse space. They have now abandoned that plan, and they're going to sell it at a massive loss. So yeah, commercial real estate, not something I'd be touching with a 10-foot pole right now. Look at some of these. Here, let's look at this chart. We haven't looked at this one in a while. Speaking of commercial real estate, how about retail space? With Americans sitting on $941 billion worth of credit card debt, 941.9. By the way, this number is due for an update today. I don't know what time this number updates, but it's now been 7 days since the last update. Right? Sooner or later, these cars are going to get maxed out. Americans keep putting life on the credit card. I wouldn't want to hold commercial real estate into that market. Thank you very much, Cheeseburger. Appreciate the support of the channel, sir. By the way, Cheeseburger, speaking of Greg Manarino, Cheeseburger, the inspiration for the MMMRI video that came off of a super chat from Cheeseburger on one of my first live streams. OG Melonhead, Mr. Matt. Thank you very much, sir. And I don't think I missed.
You missed
one.
one
I did miss
up.
one. Yep.
Yep.
I missed Jose Orozco. Everyone else's LinkedIn feed about layoffs. I haven't updated my LinkedIn in a long time. I got to do that. I got to get on LinkedIn. I laid off my LinkedIn page. That's what I got to do. So I can't tell you about my LinkedIn feed, but I can tell you your Melon feed is certainly layoff heavy because every morning I do a live stream, and every morning there's another story about another company laying off another 1,000 people. Every day for almost 2 weeks now. So I don't expect that trend is going to stop. But hey, remember, we've got a strong labor market, folks. Disregard that whole $1.4 million snafu in the second quarter of 2022. The labor market is strong. We have a strong job market. Come on, man. Thank you very much, Jose. I cannot confirm nor deny because I haven't been on LinkedIn in a long time. Something I need to do. But thanks for the reminder. It's just one more thing I need to do. My God, I'm so backed up. I have so much stuff to do, folks. So much. By the way, I've been using ChatGPT a lot lately. Speaking of like stuff to do and how I need to be more productive, folks, spend a little time this weekend on ChatGPT. I'm just going to leave that with you. All right. Let me just give you a little. This is a little like personal betterment. All right. This is really good. I'm going to bring it up right now. We'll see if it's even working right now. Because it's, yeah, it is. Okay. Let's say I'm making a video. Give me a topic, Mish. What am I making a video about? Hypothetically.
Fed rate. Just say overnight Fed rate.
I'm going to tell ChatGPT, make me a title for a YouTube video about the Federal Reserve raising interest rates. Make it less than 50 characters. Watch this thing spit this out. There was typos in there, and it. Fed hikes rates. What it means for you. That's actually pretty good. Gives the viewer a vested interest. Right now, when I write a title for a video, I usually write it 3 or 4 different times. I mix and match the words. I try to shrink the characters. I spend a lot of time on it. Now I can take what ChatGPT just gave me. I might tweak it a little bit, but it gives me a good starting point. And it took how much time to do that? Write me a description for the video. Watch this. Is ChatGPT going to make me obsolete? I don't know. Look at this. Here you go. Description of the video. In this video, we'll explain the recent decision by the Federal Reserve to raise interest rates and what it means for you and the economy, from the impact on mortgage rates and credit card debt to the effect on the stock markets. This is the AI spitting this out right now in real time. Now I'll say something like, make it shorter. And here we go. It spits out another version of it. It's probably going to be about half the length. Look at one sentence. This thing is good, folks. All right. And I don't care what you're doing in your day job. Maybe you need to send an email to your manager about some change that needs to be made. Tell ChatGPT to draft the thing up for you. And then go do something else while ChatGPT is drafting an email for you. And then go tweak it and put your own personal change on it. This is, there's a lot of people saying this is going to wipe out all the jobs and all the people are going to be broke and UBI. Yeah, we had that discussion on a video I did last week. This is a fantastic productivity enhancing tool. And it's new. It's in its infancy. Do yourself a favor, especially you young guys, you millennials and Gen Zers. Get comfortable with this. Learn how to use it. Learn how to make it make you better. And you'll be glad you did. That's one thing you need to take away from this stream, folks. Get comfortable with ChatGPT. This thing is powerful, and it can do a lot. I have already used it. It's helping me with my titles, with my descriptions. Now, the data, it's only good up until 2021, but it helped me with things like, I was asking it about how many houses in the U.S. use home heating oil versus propane to try to estimate how much of a certain statistic for propane and propylene was due to propane. I mean, and it's far superior to Google. Let me just put it that way. Any information you need, but this is only updated to 2021. So it doesn't include anything that's happened in the last 2 years. And as always, you should probably verify anything that this gives you just to make sure it doesn't spit out incorrect information, which all the disclaimers on this thing tell you. All right, let's talk a little bit about credit card debt, because I've been talking a lot about how consumer spending is being reduced, about how the GDP numbers were lies. And, I mentioned earlier in the stream, we don't do confirmation bias here. And I found this article, and it's a little contrary. It's not a little contrary. It's a lot of contrary to what I've been saying. And so I'm gonna give you this one, guys, because I'm gonna give you both sides of the trade. You make up your own mind, and I'll tell you what I think about it afterwards. Credit card giants see consumer spending remarkably resilient amid recession fears. Quarterly results from credit card giants MasterCard, Visa, and American Express out this week added further evidence that consumers remain in good shape amid elevated inflation and swirling recession fears. And there's this quote from American Express CEO Stephen Squeri. Did I say that right? We aren't seeing recessionary signals. All right, so that's the credit card companies. That means people are still swiping. All right, credit card companies, they make their money based on the number of times you swipe. And I would add that credit card companies make a lot of money if you swipe in another country. And that's really why the credit card company earnings reports have been really good, is because people are still traveling. Americans are traveling. There's been a lot of pent-up demand for travel because of the cerveza sickness, as George Gammon would say. And so people are finally leaving and going on a trip. Although that has already started to slow. Those results are slowing based on some of the quarterly results from, I think it was Visa, had mentioned a significant slowdown in overseas spending, but still higher than previous years. All right, so that's one way to look at it. The credit card companies are saying, oh, very resilient amid recession fears. Check out this one. Shout out to Mish, who spotted this. The state of the U.S. consumer in one chart. This is a tweet from Zero Hedge. Debit card transactions are down. Credit card transactions are up. Now, I can tell you, I don't use my debit card for nothing. I don't ever use it. I use my credit cards because I use my credit card for every transaction. Then I pay my credit card in full at the end of every month. So I get the points. I pay nothing in interest. The banks pay me for that debt. I don't use my debit card for anything. I don't even take out cash with my debit card because I'm so cheap. I don't like paying ATM fees. I'll go to the bank and make one withdrawal a month and just be done with it. I hate ATMs because there's the fee that they charge you, and then there's the fee that your bank charges you because it was the wrong bank's ATM. I'm not paying 20% or 10% in fees to access my own money. No, thank you. But look at this one. The number of, what do we got? Constant and nominal. Okay, so they're adjusting for inflation here. But debit card transactions down, credit card transactions up. That, folks, is this chart in basically America's credit card debt. Look at it rising. Now, I mentioned this morning in my live stream that in December, credit card debt kind of plateaued a little bit. It's still rising, but it's rising slower. And we saw that in these personal spending numbers that came out in the PCE this morning. This is U.S. consumer spending. It dropped by 0.2% month over month in December, worse than the market had forecast for a 0.1% fall, following a revised 0.1% decline in November. Consumer spending is cooling due to high interest rates and prices for goods and services as the holiday season wrapped up. 2 months in a row now, consumer spending was in decline. But remember, according to the GDP numbers, consumer spending is on the rise. Again, those GDP numbers, they're fake. It is inflation masquerading as economic growth. And here you can see it right here, 2 consecutive months. And since when does consumer spending drop month over month in December? Besides freaking never. When does that happen? Consumers almost always exclusively spend more in December. This is not like economic theory here. This is freaking fact, man. And then all of a sudden, like, what happened in October? And now nobody's spending any money. So, you know, you've got a couple of contrary things here. You've got the CEOs of the credit card companies are saying the consumer is resilient, that they're still swiping. Although this is fourth quarter data. Maybe they're looking at all this data from October. They said, hey, the consumer was pretty strong in October, and that was enough to keep the average kind of higher of November and December. But then you've got this that says, well, that debt growth has kind of slowed. That means people are starting to max out their cards. And then you've got this one from Zero Hedge showing that consumers, they're not swiping their debit cards. They don't have any money in their checking account. They're swiping their credit cards. By the way, they're sure as heck not swiping it at Bed Bath & Beyond. I know we got a lot of apes that follow this channel. I love you guys. You guys are awesome. All right. By the way, hashtag Occupy the SEC. Check that one out on Twitter. There's a bunch of guys right now camped out in front of the SEC demanding accountability, demanding Gary Gensler do his job. What a concept, Gary Gensler. How about instead of trying to exclude everybody and deny them access to Bitcoin, how about you go after Ken Griffin and Citadel? Gary. Ridiculous. Citadel made $16 billion last year. Do you think that has anything to do with them front-running all the trades that they're buying from Robinhood? Do you think? Maybe. I'm sure that's a level playing field that Citadel's trading on. Gag me, Gary Gensler. You useless boob. Probably just got myself in trouble for saying that. Anyway, Bed Bath & Beyond defaulted on their credit line with JP Morgan and warns it can't pay down its debts. I know a lot of you apes were really excited about this one. Guys, this company's done. They're not going to make it. They're They're just done. The housing market is frozen solid. And if the housing market does manage to unfreeze, it's only going to be to crash. And when the housing market is crashing, people don't shop at Bed Bath & Beyond. All right. So regardless of what the shorts have done and what the outstanding interest is, this company is toast. I mean, they have got days, maybe weeks, a month at best to live. This company is done.
But yeah, they're pulling a full Radio Shack.
Yeah. The stock right now at $251. This was as high as like $12 a month ago, wasn't it? Yeah, this was at $5. It was way up there. But this one, it's not going to make it. The business model is just fundamentally flawed. Bed Bath & Beyond is not going to make it, folks. All right. I don't think did I miss anybody? Oh, I did miss.
No,
I did miss one. I missed. I missed Cheeseburger. I'm good. I'm finding you, Cheeseburger. Where are you? There was one about ChatGPT. All right. How many articles you referenced were just written by ChatGPT? You know, I read that. Who was it? BuzzFeed. I did see an article. I read a lot of articles, guys. For every one that you see, there's 10 that don't make the cut. My eyeballs hurt by the end of the day. I did read that BuzzFeed, the garbage rag that is, that they are going to lay off their writers and have ChatGPT write their articles from now on. Let's see. Let's do that. All right. Let's do a little experiment with ChatGPT. Thank you, Matt, for the super chats, by the way. Ready? Write me a BuzzFeed article about, we'll say a title, BuzzFeed article title about how everyone needs to stop eating meat because cows fart too much. Man, I am going to get myself in trouble with this stream. Why eating less meat is essential for saving the planet. The shocking truth about cows' flatulence. There you go, BuzzFeed. I want a nickel for every view, BuzzFeed. Come on. ChatGPT just wrote me my BuzzFeed article title. All right, let's say, now make it for Vox. Because you know Vox is right behind them. The climate impact of livestock, how reducing meat consumption can help mitigate cow methane emissions. This thing's good, man. This tool is good. So thanks a lot, chat. Thanks a lot, Cheese. Appreciate the super chat, guys. Thanks, everybody. I think we're going to wrap it up there. Markets are closed for the week. Look, long story short, let's cut this to the chase. It's no longer about the Fed. All right. The Fed pivot is not a good. It's not a good sign. All right. Feds don't pivot until it's already too late. It's already too late now, and the Fed hasn't pivoted yet. They're going to keep hiking. They're going to keep tightening. All right. Things economically are going to get much worse. Now, there are people who are pumping cash into the stock market right now because they think they can front run the Fed and get rich doing it. It's going to blow up in their face because stocks don't perform well in a liquidity crisis. And that's what we're barreling toward right now. Debt is going up in smoke. People are running up their credit cards. Auto loans, don't even get me started on auto loans. Houses, the housing market, those layoffs. There's a housing crisis a few months out, folks. All right. Stocks do not perform good under those conditions. All right. So maybe stocks go up again next week. Maybe they do. All right. People are aimlessly piling money into risk assets right now. It's not going to end well for them. All right. Me, I am staying largely in cash. I like to nibble on my Bitcoin. I like to nibble on my silver and my gold. And I make an options trade every now and then. But for the most part, I'm still sitting this one out, and I'm waiting. All right, Mish, you got anything you want to add, brother?
Everybody stay safe out there.
Stay safe, everybody. By the way, thank you very much to my Patreon supporters for everything you guys do for the channel. You guys are awesome. Get together every Wednesday over a Zoom call to talk about money and markets face-to-face. That's always a good time. Thank you, everybody, for your super chats, for everything you guys have done to the channel. Don't forget, link in the description. Go check out that video about the job, about the lie of the strong labor market. Send that to every reporter. Send it to your mom, your grandma. Send it to your wife. Make her read it. Don't end your marriage on my account, but go right up to that point without crossing that line. Get that video out there. Get that story out there. It needs to be told. Do not let that story die in darkness. It is a huge story, and the press was refusing to cover it. All right, I'm off my soapbox. Have an awesome weekend. Hi, Mom. Hi, Dad. I love you guys. And until next time, everybody, live small and dream big.